Welcome to another deep dive into the world of high growth stocks. Today we're talking about Upstart Holdings, and this stock is poised for massive upside growth. And we're not talking about just buying the stock. We're going to go ahead and utilize Leap's options and a poor man's covered call in order to supercharge our returns. Now, before we dive in, remember, this just isn't about chasing gains and profits. No. We've got to understand the whole stock, the whole company, and understand the risk, the upside, the downside, and utilize the poor man's covered call to multiply our profits. So whether you're a seasoned trader or a beginner, buckle up. We've got something for you. Before we get started, be sure and hit the like and subscribe buttons down below. Let's get at least 100 likes and get this video out to as many people as possible. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Upstart Holdings is a fintech company that operates a cloud-based AI lending platform in the United States. The company's platform aggregates consumer demand for loans and connects it to a network of AI-enabled bank partners. It differentiates itself through its innovative use of AI in the credit decision-making process. The company's proprietary AI models are designed to more accurately predict credit risk, potentially allowing its bank partners to approve more loans while maintaining or reducing loss rates. This approach aims to expand access to credit for consumers who might be overlooked by traditional credit scoring methods. Upstart has demonstrated significant growth and market traction. Its revenue growth is outstanding. The company reported revenue of $604 million for the trailing 12 months. It's expanding membership as well. Upstart's AI-driven platform has attracted increasing interest from both consumers, they've got over 3 million customers, and bank partners. They've got over 100 banks that use their AI platform that they connect customers with. They also have a diversified portfolio of products. The company has expanded beyond personal loans to include automotive, retail, and refinance for home equity and home equity lines of credit. And they even do small dollar loans, personal loans. However, Upstart does face challenges. Profitability is a concern. The company reported a net loss of $45 million last quarter, and it's a pretty volatile stock with a beta of 2.19. However, by utilizing the poor man's covered call, we're going to work both sides of the market, and there's some pretty nice premiums on the short call side, both weekly and monthly. By the way, if you'd like to receive a free options guide outlining all the strategies and management of those strategies as well, comment options guide down below and I'll send you the free link. Analysts have mixed thoughts on Upstart's potential price predictions. The average 12-month price target for Upstart is $61, which represents a 16% decrease from the current price. Some analysts are more optimistic with price targets ranging all the way up to $94. However, others are more cautious, so there's a wide range of thoughts on it. It's important to note that Upstart is trading at $73 right now, so it's above many analysts' predictions. So you might want to wait for a slight pullback before purchasing that Leap's option, but I think it's a great opportunity. So what was Upstart's previous high, and can it get back to that level? Well, Upstart's all-time high stock closing price was $390 on October 15th, 2021. Reaching that level again would require a significant increase from its current price of $73. While Upstart has grown strong recently with a 120% increase over the past year, returning to its all-time high faces several challenges. Although, you know what, if it only gets halfway there, we still do pretty good. Profitability issues. Upstart reported a net loss of $168 million, indicating ongoing profitability challenges. It's a volatile stock. The beta is 2.19. So it's more volatile than the overall market. And the competitive landscape is becoming more challenging. The fintech sector is highly competitive, which could impact Upstart's growth potential. Upstart's future success will likely depend on continuing to develop its AI models, increasing profitability and being sustainable, and expanding its product offerings like it's doing now. So what is a poor man's covered call? A poor man's covered call is an option trading strategy that simulates a traditional covered call position with less capital outlay. The poor man's covered call consists of two main components: buying a deep in the money call option with a long-term expiration date, typically several months or a year or more out. And this long call acts as a substitute for owning 100 shares of the underlying stock, and then selling an out-of-the-money call option with a shorter term expiration date on the same underlying asset and collecting premium either weekly or monthly. The strategy aims to benefit the trader in a couple of different ways. We can generate income either weekly or monthly through the short call, and at the same time, the value of the option, the LEAPS option, the deep in the money call option, will increase in value as long as the stock price moves up. All right, guys, open up your option trading platform. I'm utilizing Tasty Trade. It's a great platform and brokerage for trading options, and I've got a link down below. And if you utilize my link, there's some benefits. I also utilize Moomoo, which is great as well. Check that one out, benefits as well. So punch in UPST for Upstart Holdings in the upper left here, and we are on the trade tab on the platform. Now, you're going to see all the weekly options chains. The ones with the W are the weeklies, but I want to go out to the regular, and I want to go out, I'm going to go 225 days to expiration out to the July 2025. We can also go out, even into January of next year, but let's look at the pricing difference. I want to go somewhere around the 0.65 or better area, the delta right here on the left. So we've got calls on the left, puts on the right, and we're going to buy a deep in the money. So we're going to buy on the ask right here. And here's the 70 call option, and it's at 0.67. So that actually looks pretty good for $23.75. Now let's look a little further out. If we go out further, which gives us more time to December, that same 70 is $29.30. So each option contract represents 100 shares of stock. So that's times 100, so 2,915 for that option. So I actually like the 225 date, the July 2025. So I'm going to go to that. I'm going to click on the buy for $23.45, and then we can go to the mid price, and you'll see right here $22.85. We could hit review and send and get filled on that. I do want to show you though on the curve mode, if we go here and then we put analysis, you will see as the stock price moves up in value, and again, we get back up to this $120 range. You can see the P&L at expiration is $2,765. So it more than covers what we're paying for the LEAPS option right now. So you can make huge profits utilizing LEAPS options as long as the stock price moves in your direction. But now let's go back to the table mode, and we've got the LEAPS option on. Mid price now is $2,300, so you can see it's moving, but the stock price is at $73 still. Now we close this up, and then we can look to sell the short term. So here's the one, the regular option chain coming up is the December 20th, 15 days to expiration. Look at the meaty premiums. We can go all the way out to 80 and collect $2.83 if we sell that call. That's huge. That brings our cost of our LEAP down to 2011. So we could do that, or let's delete that. Let's look at the next chain. Sometimes I go 30 to 45 days out. If we go out to January and we look at that 80, we collect $605, $600, $605. Just imagine collecting that every single month. So you could either go 45 or you could go shorter and then roll to the 45. Either way, it's pretty similar. But if we go out here to the 80, which is the 45 delta. We'll make money on the leaps as it moves from 73 up to 80 if it does. If it doesn't, then we're going to keep all this $610 in profit. So we're making money on both sides of the market. You can see that brings the price of the leaps or the total poor man's covered call down to $1,700. So that's why I like this strategy. Hit review and send and place the trade. All right, guys, I hope you got something out of this video. Be sure to like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer every one. All right, thanks for watching. I'll see you in the next video.